If you thought that last week was going to provide the market with a clear sense of direction after we started the month with 3 major central bank interest rate hikes, then you would have been disappointed. Even the RBA's hike of 25 basis points on Tuesday could not bring harmony to global markets, which have started to feel ragged, volatile and confused. The ugly price action during Jerome Powell's interview at the Economic Club in Washington served only to remind us just how disconnected markets are becoming from central banking policy. So who is right, the market or the central banks? Hello, I'm Nick Quinn and this is your weekly preview for Monday, February 13th, 2023 from the team here at ForexSignals and howtotrade.com. In every trading week, there's usually an apex, a main event which informs traders which direction the markets are likely to be headed. This week, the focus will be centered around Tuesday's US CPI print. The market is desperate to prove that its aggressive pricing of rate cuts later in the year is a done deal, despite the central banks continually maintaining that there is still a long way to go. Never before has inflation data been so under the microscope. The doves and the hawks are set to battle it out. So let's draw up a game plan for the week ahead with our expert US market analyst, Shane Vanier.
Hello everyone, welcome to the 7th full trading week of 2023. We have a fascinating 5 days on the markets for you, so let's get to it. We begin with Monday. It's a wide open vacant economic calendar, and it well should be. It's the day after the Super Bowl here in the United States, so Monday, as far as American workforce is concerned, is the most unproductive day of the year. So on our markets, we're expecting a little bit of action. It's just really hard to say with our Super Bowl, the financial Super Bowl coming up on Tuesday. Right here, this is a good look at our 10-year yields. We focused on these because really all we have is that dead instrument auction on Monday, the 3 and 6 month T-bills. As you can see, it's been a massive run-up that we saw in August in yields, August through October. Really, took us from an area of about 2.5 all the way up to 4.3. Since then, we've sort of tapered off that uptrend, but still very much in bullish territory with holding right above that 38% at 3.65%. So still fairly bullish here on these yields. We're going to find out a lot more of that on Tuesday and as the Fed meets throughout the spring. Now, the dollar index is our next target that we want to look at for Tuesday. Tuesday is the big day. We just said it's the Super Bowl of the week, of the month, perhaps of the year. We're looking at CPI. US CPI is due out. We're going to do a live stream, a live tri-stream. We'll have all the events for you as it unfolds. But what we have here is a set of expectations that are sort of expecting CPI to go up a little bit in the short term, but come down over the long term. So we're really looking for that disinflationary cycle to have begun, as Jay Powell told us last week. We will certainly see if that is the case. The proof's in the pudding. Those CPI numbers are going to be absolutely huge. Now, looking at the dollar index, we've been in a heavy rotation here with the dollar for quite some time. As you can see on the monthly, this is 2022's range. We have just really been stagnant around that 62% retracement, 102.38 for a long time now, seemingly forever, about 60 days. So we wanted to get some good disequilibrium in price, have an opportunity to buy around 99 or 100. Just didn't quite happen. So this dollar index is very much in rotation. We're looking at 104.75 to 105 to the top side, 102.35 to 102 flat to the bottom side. Wednesday, more inflation data. So if US CPI on Tuesday didn't do it for you, UK CPI may do it for you on Wednesday. Midweek trade will be dominated by inflation and the reactions to these numbers. So the market that we're looking at here is your British pound. Now, the question facing the British economy in the United Kingdom is what's going to happen to the broader growth scenario domestically. And right now, the UK has been projected as one of those countries that's going to be hardest hit in the G7 by an economic slowdown. We don't necessarily know if that's the case just yet. We believe that the UK is on its way to a recession, but we believe that the global recession narrative, it just hasn't quite taken shape yet. So as we get into these CPI numbers from the UK, we're going to see if inflation is as robust as it has been. Now, one of the things about UK inflation, it's running at about 10.5% on a yearly basis. So that is a massive number. We're looking for some type of downturn, at least on those monthly figures, to show that it's coming into check, that something is actually working against runaway inflation, and that would be the hawkish policy that the BOE has adopted. So as we look at your monthly chart here, the biggest thing I want to point out is you're still in fairly bullish territory here against the dollar, at least for the last 6 months, but the double top, I really want to point that out because that is an absolute key level. That monthly double top has occurred right at 2022's 62% retracement. So as we take a look at that retracement level, your 2022 range, we have tested repeatedly that 62% zone zone up at 124.50-ish. We got a double top up there. That level has held as topside resistance. If it does give way, I would be looking for a really a long-term bullish type of a view to up towards 130-ish. As of now, you're back down to about 120, about 120.46. So a little bit of rotation here in the British pound, but I expect these CPI numbers are going to shake things up, and we may potentially either get a big retracement down to 116, or we could be well on our way to 130. So a lot going on for the pound there on Wednesday. Now on Thursday, for that Thursday session, it kicks off early during the Asia Pacific, and you have a key economic metric coming across the wires out of Australia. You have the Australian employment change numbers coming out for January. Now, this is a key statistic because we really have a mixed bag of economic numbers in Australia. The inflation is running extremely hot, exceedingly hot, as it is in the rest of the world. But there's also pressure, and that has placed pressure on your real estate market. There's a lot of folks that are predicting a big crash in the Australian real estate market, and that may or may not be the case. But what we do know is employment is very near all-time lows in Australia. So this is sort of the silver lining of the broader economic cloud that is the Australian outlook right now. So how do we trade something like this? Well, we know that the employment numbers are supposed to come in strong. They're supposed to stay right around key levels. We're supposed to improve quarter over quarter and month over month as well. And we're looking at what will that do to the broader equities market there in Australia. So we look at the Aussie 200, and you can see right here, we've got a key triple top area, a key triple top. When we go back and we look at August 2021's highs, and then you've got January 2022's highs, and you got April of 2022's highs, and they're all sort of gravitating between 76.25 and 76.50. That is a major technical area. Now, if we do get that bullish break above that zone, we may be able to buy in and get long where we need to get long, which would be right from this area. But if that area doesn't break, if it does hold, then we're sort of in a situation where if this top side resistance proves valid, we could see a major retracement. And I mean a major retracement from here for perhaps the rest of the year. So this is a key technical level. Definitely have your eye on 76.25 to 76.50 to the top side in the Aussie 200. Should be fascinating to see how this develops. Is it resistance? Does it wind up being a breakout point? We just have to wait and see. The employment metrics could drive us to a bit of participation in that arena. Now, the FTSE 100 is probably one of the most overlooked indices in all of finance right now. I don't hear anybody talking about the FTSE 100, and you've had an absolute breakout. So even amid those the pending recession and all the doom and gloom coming out of the UK, this equities market, this indices has been on an absolute serious just tear going back to October. So when we look at our monthly chart, we can see we've broken out to the bull. What could derail this, or what could even send stocks higher? And that's what we have for Friday. The week wraps up with a group of retail sales numbers out of the UK. Now remember, we're looking for global recession. So what would that mean? It means lagging consumer confidence and reduced retail sales. And when we look at the British economy, if in fact those retail sales numbers come in strong, that's going to sort of say, well, maybe the recession's not going to be as bad as we think. Well, I'll tell you what, this FTSE 100 right here, nice rally, 1, 2, 3, 4, very good 4 out of 5 months performance. This year started with a bang. So right here, you're going to be looking to buy some sort of retracement in what is a formidable intermediate term trend. We step up with our weekly chart. You can see, that's just an accordion hook, boom, move, pull back, move, very much to the bull here. So once we get that weekly high established, we could certainly build the case perhaps to go long this market somewhere around a decent retracement level. In my view, that would probably be a nice deep retracement into this bit. We've seen bidding here in the past, maybe right back down there around 78, somewhere down in that zone, maybe 78.50 would give us an opportunity to get long the FTSE. So it's a big week. We've got inflation on Tuesday. We've got inflation on Wednesday, some Australian employment numbers, and then we wrap the week with retail sales out of the UK. It's going to be a great week to trade all asset classes. Be sure to stay tuned, and we'll have the action for you live as it breaks.
With big money now back at the table, this week's price action will provide valuable insights into where the trends will develop between now and Easter. And CPI will be the biggest clue. But who will win, the markets or the central banks? Why not subscribe to the channel and let us know who you think has called it right in the comments below. We'll choose one at random, and one of you will win a free month's access to our trading room. We'll announce the winner next week. Until then, trade well, and we'll see you in the next live stream.